They say the only constant in life is change. Well, Hong Kong is in store for a lot of it. Hong Kong spent the last few years with, you could say, something of an identity crisis. Its relationship with the Chinese mainland has been magnified by first the protests that were in the city and then, of course, the pandemic. The economy is currently mired in some fairly deep trouble. It is predicted to have shrunk for a third quarter in a row in the 3 months to September. And, as we've previously mentioned, the city's leaders have been turning to fintech for some of the answers. Those answers are front and centre as the city kicked off its 7th FinTech Week. The theme this year, pushing boundaries and reaping benefits. Eyes, of course, are laser focused in particular on new plans to make Hong Kong more crypto friendly. That includes fewer retail trading restrictions, green bond tokenization, and a new licensing regime for virtual assets.
It covers our vision, regulations, thought on investment protection, and pilot projects to capture the technological benefits and financial innovation made possible by virtual assets.
The big talking point here is a complete rethink on retail investor access to crypto. Hong Kong currently restricts crypto trading to professional investors, and by the way, that's people with more than $1 million to spare. It's also been confirmed that Hong Kong's residents will be asked about this move. A statement about policy plans said virtual asset ETFs were among those being looked at especially closely as part of this. The head of Hong Kong's monetary authority, the de facto central bank, said they were trying to bring digital asset rules in line with everything else in the city.
The basic principle is very simple. Same activity, same risk, same regulation, so that digital assets performing similar functions to traditional products should be subject to similar regulations. And that is exactly what we and other regulators in Hong Kong are doing.
As we mentioned, though, Hong Kong's relationship with the Chinese mainland has been under the microscope. In the wake of the ban on crypto by Beijing last year, big question marks have hung over Hong Kong's permission to do things differently. Here's the city's head of financial services and treasury.
Definitely, Hong Kong is part of China. But at the same time, we operate under one country, two systems. So we have our own financial system, we have our own currency, and that's why we have our own policies in terms of what I just described. That's number one. And number two, I think one of the key elements that international investors or people come to Hong Kong is because of our international connectivity and together with our access to China. The rule of law and the way that we operate, which are in line with international standards, and also our world-class regulatory regime. I think all these has and will continue to stay for Hong Kong to be relevant under one country, two systems.
To get some perspective from the industry, we spoke to Neil Tan, who's the chairman of Hong Kong's Fintech Association and also the CEO of blockchain startup Neptune Digital. He reckons allowing retail investors more access to the market will be key.
Now Hong Kong is back inside of the game, and I think that the retail piece does play a huge piece, right? I mean, if you look at the overall exchange and the market capitalizations, a lot of it does drive from retail side. Having said that, if you said professional and also institutional coming in, of course, that's sort of like the future state, right? Everybody wants institutional to have more conversions into crypto, more into digital assets. So I think this is also helpful.
New licenses for virtual asset providers is something already being discussed by local lawmakers here. Neil said the timing of this move in particular was spot on.
Probably the best thing is that you're introducing it inside of the winter. So asset prices have come down significantly, 60, 70, 80, 90%. So there's very little risk in terms of the downside. There's a lot more upside as far as the virtual assets are concerned. Everybody else has shown their cards, if you will, like Dubai and also Singapore has already shown their cards as far as what the regulatory framework would look for those jurisdictions. So now I think that Hong Kong is in a very strong position. Basically, we want to go to the Super Bowl, right? It's like, we're ultimately, we want to build a championship team. We want to go to the NBA finals and we want to win the championship, right? That's really what it is, right?
Neil is also among those warning, though, that having the regulatory framework for crypto isn't enough on its own. Building ecosystems takes time, and shifting attitudes towards assets, virtual or otherwise, even more so. What's clearer now, however, is where Hong Kong wants to be. that's it for this episode. Like and subscribe to this video for more content like it, and let us know what you think about all of this in the comments.